Amazon announced a 20-to-1 stock split, and I think people are confused about what that actually means in terms of valuing the company. In this video, I'm going to go over exactly what a stock split does to the price of the company, and then I'm also going to talk about how I took this news and made a nice profit on the day because I was trading the volatility of Amazon stock. So first off, Amazon is splitting their shares 20-to-1, and what that means is one share of Amazon is going to become 20. So if you own one share of Amazon, you have 20 after the split happens. You don't gain any money from this. The price of the stock will turn from the current price of the stock divided by 20, and that's the current price of your stock. Now, people think this adds value because it's suddenly worth more, but it doesn't. Think, if I was to take this dollar bill and rip it in half, did I just gain money by doing that? No. That's exactly what this is. Just think of it as it's just ripping money in half, or actually ripping it 20 times. You're not actually creating any value by doing that. So Amazon is still worth whatever Amazon was worth. It's just that the price of the stock is going to be lower. And some people, this is still a bullish thing because more people can afford to buy a $140 stock instead of a $3,000 stock. So you might actually see an increase because of that. And that's kind of the reason why Amazon might jump up legitimately a little bit. But it shouldn't jump up significantly because of this move alone. So what you want to do is look at the market valuation. And what you do is you multiply the price of the stock by the amount of shares that there are, and then that's the market cap. So on close of March 9th, Amazon closed at $27.85, which means that the market cap is about $1.4 trillion. But then after the news of the stock split happened, the high of March 10th, it went all the way up to $29.73, which is $1.5 trillion, meaning that just because they ripped that paper in half or ripped it up 20 times, it's now worth almost 7% more. That's not how that works. So obviously people took advantage of that and they're going to make trades because they know other people think it's going to be a cheaper stock. If I buy one now, I get 20. It feels like a deal. It's all exciting. But we saw Google recently go through a similar cycle. They announced a 21 split, and obviously there was a big run up. Even I bought some shares pre-market in order to just sell immediately at open to take advantage of that little hype from the news before it got dumped. And I basically did the same thing with Amazon this time. But going back to this, after the the 20-to-1 split, the share price should be about 139, 140, depending on where Amazon decides to settle down when all the hype happens. And there's going to be a lot more shares. So instead of having 507 million shares, there's going to be 10 billion. And what do you know? If you multiply these two numbers together, you get the same number that was here. So there's no additional value made because they're splitting the shares. Although it does make it a more affordable price that other people can buy the stock at 100 and get in low, depending on what they think. So it going up by 6.7% when the market overall was going down basically the entire day was a little overboard. And so, of course, I had to take advantage of that. Now, what I did is I actually did a bunch of trades. And you can see I realized a little over $3,000, mostly trading Amazon. Gonna pull over the trade screen here. And hopefully that's big enough for you guys. And you can see I was doing this with zebras. Basically, it's a trade where it's a back ratio spread where there's a zero extrinsic value so that you're not fighting theta. And you simulate owning or shorting 100 shares of the stock. And basically that's what I was doing. So at open, or actually a little bit after open once the trend was confirmed, I was a little worried with the market going down that it might become invalidated. But so I did end up having to go ahead and put on some trades on Amazon, which, if you know, last time I did Amazon, I did take a pretty big loss. But this time I felt the Google cycle was going to happen again, and I wanted to take advantage of that. So what I did is I put in a combo order for the zebra and bought one of these. So basically what I did is I sold an at-the-money call, and then I bought two in-the-money calls in order to create a play that simulates owning 100 shares. but instead of having to buy 100 shares at 2,910, which would be $290,000, I was able to control 100 shares with only $12,399. So that's what this play does. It simulates owning 100 shares. And sure enough, Amazon went up. I think it moved up like 20 bucks, and I decided to go ahead and close the play out. And it was a very quick $2,000 gain on the day. Then Amazon went up to 29.37 or so, and I decided, you know what, I think this might be the high of the day, so I'm going to go ahead and bet that the stock goes down. So I did the opposite. I did it with puts. I sold an at the money put, bought 2 in the money puts where the extrinsic value becomes 0, and sure enough, a little bit later, I did close that out for a small gain, and literally as soon as I closed the sucker out, Amazon dropped right back down to 29.14, so this could have been another $2,000 gain easily. But I closed out because I thought I was being greedy and decided to lock in a gain and call it a day. But then during my lunch, I went ahead and I did go back in, and I decided to go bullish again because it was at 215. So I bought some calls. At one point, this was up to 2,200, and I didn't take that win. And then as it came back down, my stop loss that I put on once it went up got triggered, so I exited with almost a $300 gain. And then at the end of the day, I did put on a pair of bear zebras when Amazon was trading around 29.40 and 29.45. And I thought that would be the high, that there'd be a market, dump at the end of the day. But Amazon actually shot up to 29.70, I think it was. And so these were sitting at a pretty big loss for a while. Right before the market closed, I was able to close one of those out for a small gain. I tried to close the other position out. I even put I tried to sell it at bid, and it didn't get filled. So unfortunately, I am holding one of these bear zebras overnight, which I did not intend to do. And if you take a look at the stock chart, change this to the 1 minute candle, why not? You can see at the end of the day, a lot of people that were trading the stock did not want to hold it overnight too, because here's this big sell-off the final 5 minutes. And even after market, Amazon went down to 29.20, which for that option play would be a $2,000 gain. I would love to close it, but since it's after market, I can't do that. And basically what I think is going to happen is the news about the split has already played out. It's like the plot armor that kept it going up, even though the market was going down, has been used up today. If the market opens flat or down tomorrow, I think Amazon is going to go down significantly. Although if the market overall is moving up, then Amazon could still see a little boost from that and could go up, which is why I don't like that I still have that bear zebra open. So we'll see what happens tomorrow at market open. Hopefully it opens low and I can get out for a profit. But I expect that Amazon is just going to kind of trend right back down to where it was on Wednesday, like 28.80, I think it was. So there was no additional value created. So there's no reason for it to be up significantly and the rest of the market is down. I didn't see any positive news that came out for Amazon. I could be mistaken, but I don't believe this jump up was actually meaningful in any way. So I hope you guys understand what a stock split is now, and how it does not actually create any additional value. The only value that it might make is that more people can afford to buy the stock. Although because of percentages and how everything scales, it doesn't make it cheaper, it doesn't make it a special buy or anything like that. Like your gains will still be made about the same percent. It's just that Amazon, instead of moving $100 for like a 3% gain, it would move like 30 cents after the split. So there you go. I hope you guys enjoyed this. Hope it was informative. And I hope you learned that ripping $1 in half does not make you 7 cents. See you guys next time.